here, but we continue to look at some of these names and get you covered because earnings season is underway. We bring in Diane King Hall, host of Morning Movers, to take a look, and we continue our coverage here and looking now at Citigroup this morning. Good morning, Diane.
Strong quarter for Citigroup. I mean, you got to give it to Jane Fraser. That transformation that she's been working on is really sticking. I mean, they posted record revenue across the board, every single business line of Citigroup. So the share price today, across the board, when you're talking about the banks, may not be actually reflective of their numbers, given that we have the macro headwinds of the U.S. versus China. And I was talking to an analyst earlier who said that that could certainly take the shine off of these earnings. But here's how they performed. EPS coming in at $1.86. That's up 23% year over year. Revenue topping $22 billion, $22.1 billion. That is up 9% year over year. We're looking at EPS, of 224. Again, better than expected. Keep in mind, the stock has outperformed the S&P 500 year to date, up more than 30% year to date, outperformed many in the financial sector. We've seen a lot of growth in shares here. Let's go across their business segments. In banking, revenue rose 34%. A lot of that had to do with the deal activity, advisory fees. We've been talking about that deal flow. The IPO market has been hot this year. This most recent quarter was the strongest quarter for IPO activity since 2021. So there's been this theme of IPO fever, and we've seen it play out, as you and Sam were talking about earlier, here on the floor of the New York Stock Exchange. For markets, it was their best third quarter on record. You had 15% growth there. Fixed income, you saw growth there as well. Services up 7%. Again, another strong quarter, banner quarter for that segment as well. Wealth, we talk a lot about Citi and its wealth group. They've been really, working on that business. That was up 8%. It's a big part of Jane Fraser's push for growth. Retail was up 7% as well. So you saw growth there. So it doesn't matter the demographic at Citigroup. You had strength across the board, just really firing on all cylinders. Now, expenses did increase. That was partially tied to that partial Banamex stake sale, and then there's some higher compensation costs. They've been adding some deal makers. I've seen some of the headlines of who they've been bringing in and tech talent there. I saw some similar in terms of growth over at Goldman Sachs. So to me, that shows that there is belief that the demand flow will continue, the pipeline will continue. And a quick note to their IB business, because I know you've been looking at the banks. JP Morgan Chase had a strong quarter, but Citi actually outperformed JP Morgan Chase.
It's incredible. All of these names have some sort of record. When we say that every business in Citi posted growth and record revenue, it's incredible. And then we take a look here at Domino's Pizza, which, we look at this name and the macro environment is tough, but I saw a 510 price target this morning.
Yeah, I saw that too, actually. So, and listen, Domino's did do better than expected. EPS was 408, so that was better than what the street was looking for. You saw revenue also climb. Revenue climbed more than 6%, topping $1.1 billion. So again, that was better than expected. Where the strength was here in the U.S. U.S. same-store sales, those rose more than 5%, 5.2%. That's the strongest clip since early 2024. Part of that had to do with some promo deals and some new menu items there. International same-store sales did grow. Those increased 1.7%. It is positive, but it's slower than previous quarters. But again, that strength in U.S. sales helping to offset, that we're not seeing as strong growth. Shares were even higher in the pre-market. The fact that they're holding on to a gain when you have weakness overall in the market says something about Domino's. It has been an underperformer compared to the S&P 500 year to date, but if you compare it to other, say, fast casual chains, it's been an outperformer.
Yeah, and also it just has something different than the rest, right?
Yeah.
They said don't block it in with the restaurants, don't block it in with everything. Domino's is sort of its own, entity. Mm-hmm. And stuffed crusts are hot. People love the stuffed crusts. How about Johnson & Johnson? So you have a spinoff, we have numbers.
Yes. So J&J, it's doing another spin-off here. They're separating its orthopedics business. Those makes artificial hips, knees, joint implants. They're separating that into a standalone company. That will happen within the next 18 to 24 months. It's its second major spin-off in 2 years. You recall this follows last year's split of its consumer health division into Kenvue. Now the orthopedics unit, that made $9.2 billion in sales last year. So that's about 10% of J&J's total revenue, but it's grown more slowly than other divisions. It's part of its strategy to focus on higher growth, higher margin areas, quickly growing through adjusted EPS 280. That was a beat. Revenue nearly $24 billion. That was also better than expected. Analysts are saying the spinoff could help create a faster growing J&J. They're trying to kind of separate the slower growth parts of their business. So again, this is, overall kind of part of that shifting plan that they've had to separate some of their business, Nicole.
Yeah, stock's down, but the entire market really, other than consumer staples and real estate, looks like everything has a down arrow today, folks. So even if you have a win or some records today, the momentum is just to the downside with tech and consumer discretionary.
Absolutely.
Diane King Hall, great to see you.
Thank you. Great to be